Okay, so for those that are here, great. If you're watching on replay, even better. We're gonna go because I have a hard stop in place. Okay, so tonight is specifically about earnings season. The next 2 weeks are the most busiest, or the busiest 2 weeks of pretty much the entire quarter. Just to understand what's every day is chock full of massive companies. So today we had obviously, in the morning, for those that weren't aware, this morning, um, Domino's reported, MGM report. I'm going to go through the ones that were important. MGM reported, after the bell, Waste Management reported, F5 reported, Transocean reported. So that was what took place today. Moving forward, I'm actually going to put this up as a what's it called so you guys can see it as a share. Why shouldn't we? Right? There we go. And then here we go. So then tomorrow before the bell, we get SoFi, PayPal, UPS is going to be very, very important. Coke is always, massive company, so it's always important. That's really going to be Pfizer, but really, really, your UPS is going to be a big one for tomorrow morning. Royal Caribbean, eh, really, your biggest one tomorrow is UPS. After the close, Visa, I don't expect them to not have good numbers. Um, Booking will be that will give you, will you'll kind of get an idea of what's going with booking based off of what Royal Caribbean says. Starbucks, I don't care about it, so it makes a difference to me. Um, Wednesday, Caterpillar, important. That's going to be a China play. Vulcan is pretty important. Western Digital is on what's it called? Is on SSD, so that's going to be important. Actually, as sorry, after the close, we get Softy, Facebook. I expect Facebook to say the same exact thing that Google said, but we'll get to that in a minute. Qualcomm, chip sector, that'll be important. Um, Thursday, I'm going through the ones that really matter. Thursday, MasterCard will be a sympathy of whatever Visa says. So whatever Visa says, MasterCard's going to say. McDonald's is going to be important, only because to let you know how the lower end consumer is doing in terms of dining. As we all know, after the close, Amazon, Microsoft, those are the big ones. Um, and then Friday is Exxon Chevron. Those are the ones that really, really matter. Okay. Those are the ones that really, really matter. Market moving. So basically, after today is done, you'll have the 39, the top 30, depending on how you look at it, but the top 10 names in the S&P have all reported. Okay, so it's going to be really, really moving. While all of this is going on, we have a slew of data coming. While all this is going on, tomorrow we get at 8:30 we get um, retail inventories, wholesale inventories. We get the Case Shiller tomorrow. We get JOLTS at 10 o'clock. We get consumer confidence. We have a slew of econ data coming. That's on Tuesday. On Wednesday, we're going to get GDP. Not G, I'm sorry. We're going to get we're going to get GDP on Wednesday. We're going to get PCE again, also important. We're going to get Chicago PMI, core PCE. We have a slew of data coming. This week is chock full of everything you could possibly think of. Okay. So what was the point of tonight? Because you can all read. You don't need me for this. So I posted earlier. I'm going to read it because I think it's important. This was from an unnamed energy research firm. I know the firm. I didn't name them. Hold on one second. They wrote the following thing this morning in their note. The administration's chaos is a disaster for the commodity markets. Drill, baby, drill is nothing short of a myth and a populist rallying cry. Policy is impossible for us to predict and doesn't have a clear goal. We want more stability. That's what this firm put out today. It's very, very apropos to earnings season. Why? Let me take the share off for a minute. He's not going to get the share for now. We'll get back to the share. Why? It's not so much this earnings season about what the companies report, to be honest with you. It's really more about what they say on a go forward basis. What are they seeing? What are they looking at? What are their fears? How do they think their businesses are going to be affected? I said this on yesterday's video. I probably should have said the name. I forgot to say it. Dan Ives from Wedbush. He's probably one of my favorite tech analysts. He's really, really good because he's actually practical. He's not a cheerleader. He's actually, he says things like in a practical way. And when he's bullish, he's bullish. When he's bearish, he's bearish. When he's neutral, he's neutral. He's not a cheerleader. There used to be a I don't want to say his name, but there used to be a tech analyst over at Morgan Stanley. He's no longer there. And the guy was just super uber bullish. Tesla. No matter what Tesla could do, they could do no wrong in this guy's eyes. He left the firm. He started his own firm. And then there's obviously the famous analyst that we all know that everything in the world is bullish. No matter what, the sky could be falling and it's always bullish. And you guys all know who I'm talking about. So what I like about Dan Ives is that he's realistic. So he said something very interesting when the tariff policy came out, which made me think a lot. And one of the things that he mentioned was that if tariff policy continues, it could set the tech sector back by about 10 years, roughly. He also said something that I didn't think of, which I thought was amazing also, because the guy's really good. And one of the things he said was if Apple were to move some of their business, it would take them 3 years, $20 billion, and they would move less than 10% out of China from a manufacturing standpoint. So it's not so easy to do what's going on. On top of all of this, you have Albertson. I don't know. I posted this article also. I don't know if you guys saw it. Albertsons had made a note that they told all of their suppliers, and they're one of the largest grocery chains in the country. I think they have like 2,200 stores, something like that. They told their suppliers that they will not be paying increased costs due to tariffs. In order for you to do it, you're going to need to submit it, and they will let you know whether it's approved or not. If you go about just increasing your prices through tariffs, they will not pay it. Plain and simple. So what does that mean? What that means is that you have a situation where grocery stores or even companies at this point are not going to pass it on because they know they can't. Okay. It's very important to realize this going into earnings now because it's not so because everything that they're going to report these companies is always it's all backwards looking. They crushed it on revenues or they missed on revenues, backwards looking. What they do last quarter, what is their earning per share? Everything is backwards looking. It's all about now forward guidance. Where do these companies see things going? If there was ever calls, hold on a second. If there were ever calls that were important to actually um, listen to or even pay attention to, it's now. So let me show you how you would do it. Which company do you want to look at before we get into like technical stuff and all this stuff? What company do you guys want to look at of where to find this information? Give me any company. I don't care. Any company. Pick a company.
Apple?
Apple? Apple
Yeah.
it is. Apple it is. Hold on. Okay, let me do a screen share. So I'm in Apple's website. See that? You guys see
Yes.
this? Yes, no, maybe so.
Yes.
Oh, okay, good. Okay,
Yep, I
so
can see it. Sorry, I was muted.
no problem. So Apple, we scroll all the way down. You're going to see where it says about
Oh.
Apple investors. See this? Where it says investors? I'm going to click on that. It's going to take you to investor relations. Okay. Then you get over here all these wonderful things you can explore for yourselves. Then you're going to see here forward year, fiscal year 25 second quarter results. Apple's conference call to discuss blah, 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 blah. You can listen to the conference call webcast. Okay. Or you could go into afterwards. You can go into once it's done, you'll be able to click on this and you'll be able to You're able to go in and see. You can be able to get the press release, see financial statements, 10-Qs. You can listen to all of the calls, whatever you want. You can get all of this information. Okay. It's public. You can get it. Okay. These are going to be the ones that are going to be the most important. We picked Apple, but it doesn't matter. I'm saying this earnings season is the one. Now, here's the kicker between this earnings season and next earnings season. Okay. This earnings season, tariffs are not part of their business. All of their quarterly results, there was no tariffs. Next quarter is when they're going to have tariffs in their they're going to have tariffs in their results, their financial results. So you may look at these things as stock tickers, as things that you're going to throw around, but the reality is that they're businesses, they're companies. Okay, they may have a stock price that you like to trade, but they're not trading vehicles, they're companies. Okay, and because of this, they're going to be saying things about what is affecting their business and how they can effectively run their business and maximize shareholder value. When you're on the board of a company or you're an executive on a company, what is your job? What is your number one job? Who wants to take a crack at it?
Protect earnings.
What's
Keep
that?
investors happy.
Keep investors happy. Okay. Maximize shareholder value. That's their job. That is their job, plain and simple. You're there for one reason and one reason alone. Maximize shareholder value. If you can't, you get replaced with somebody who can. Okay. Why do companies issue buybacks? Who wants to take a guess on that?
To increase their stock value. I mean, the more shares that you pull out of the market, your revenue is still divided into whatever's outstanding, right?
Correct. 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 It's one thing that they do. Yep. It also shows that they're bullish on the company because they're buying back their stock, right?
Mhm.
One of the things that you always look at when insiders, you always want to see if insiders are buying or insiders are selling. If insiders are buying, you know that they actually find value in the shares. They want to own it. They want to be there. When insiders are selling, something is wrong. Now, let me make sure that I'm very, very clear on this. It's not predetermined sales because sometimes they have options. They have to sell them. Otherwise, they're going to lose them. I'm talking about if guys are just like selling, just like for who knows why, for like that it's not predetermined. Like you'll see at times you go through and you'll see investors selling. I mean, sorry, insiders selling. You'll see like let's say Tim Cook is selling, but he's not selling because he wants to sell. He's selling because he has to sell. Because if he doesn't sell, his options are going to expire worthless. So that's a different type of selling. But most of the time, you want to see how that are not predetermined because remember, compensation is in both salary and in stock options, right? Everybody's heard this concept before? No problem. I figured a lot of people were gonna be catching the recording afterwards. Does that make sense? Have you heard this before? You'll hear that a CEO gets paid and he'll make, I'll make up a number. He gets paid, $1 million in salary. He'll get like, I don't know, $20 million in bonus and then another $30 million in stock options. Have you heard this before?
Yes.
Why
Yes,
do they
heard
do
of it.
it? What's that?
Said yes, I've heard of it.
Yeah. So why do they do that for? The reason why the boards do it this way is to keep the executives, their interests in line with the company. I'm going to tell you something, a little secret. Lehman Brothers, okay? Even though Lehman went bust, Dick Fuld, who was the CEO of that company, his interests were very much aligned with that company. When that company did well, he did well. When that company did not do well, he did not do well. People want to crucify him and everything like this and mistakes and this. I get it. But when it came time to actual compensation, he was very much aligned with that company. He wore that jersey proudly. So when the company went bust, he lost a lot of money because he did not sell. He believed in that company through and through. So we talk, you know how you hear the concept the captain goes down with the ship? He went down with the ship and he didn't think twice about it. There was and even to just what's it called? Even to just explain the concept of insiders for a minute, they brought him in front of a committee and they were questioning his compensation. He made a lot of money over, X amount of time. But the end of the day was they were predetermined sales that he had to do. But he made the concept and he was right that when the company did well and the share price did well, he did well. When the company did not do well and the share prices did not do well, he took a hit. He did not do well. Okay. So that was so that's just a form of the insider situation of what's going on. Okay. Got it? Clear?
Yes, clear.
Okay. Good. So we have a situation now. The biggest issue that companies are facing and what they will be discussing on these calls. Again, if you want to understand what moves the market, you have to understand these companies. They're companies. They're not stock tickers for you to just sling around all day long. They're actual businesses. So to understand what they're going through, read the transcripts. I guarantee you tariffs will be a underlying theme pretty much for every company. Apple's going to be asked about it. 100% Apple's going to be asked about it because they're trying to move some of their operations to India now. So they're going to be asked about it. Exxon Chevron is going to be asked about it and what effects Drill Baby Drill, which is basically nonsense, is having on their businesses. Um, Amazon recently there was canceled an order from China. I don't know if they reinstated it or not. If they didn't, they're going to be asked about it. 100% they're going to be asked about it. Microsoft's going to be asked about it. Visa, MasterCard, surprisingly, will be asked about the health of the consumer and where they see tariffs having an effect on their businesses. Caterpillar, UPS, JetBlue is going to have this issue with travel. So there's going to be, excuse me, a lot of companies that are going to be discussing this recurring theme over and over and over and over again. There was a poll that came out over the weekend how the current administration is doing well on a lot of things, except for one. There's only one category where things are going sour. Who wants to guess where that is?
Tariffs.
What's
The
that?
economy.
The economy.
The economy. Yeah, you guys got it. The economy. That's where they're not getting good numbers. As a matter of fact, I saw a headline earlier, I didn't have a chance to read it, that basically said we were promised billions and billions per day, and we're not getting that. We're not getting billions and billions per day. So we're getting a lot of pain. And we haven't even really gotten into this yet. I could tell you right now that if you're a company, you're a CEO of any company looking at this right now, what to do, you're at a very big dilemma. Because if you're a CEO, it's going to be very, very hard to pass this cost on. If you're a CFO, you're looking at this going, if my expenses are increasing and I'm not able to raise revenue, what's that going to do to my cash flow? These will all be discussed on these calls and the forward guidance. And I'm sure some companies may even say, you know what, I'm pulling forward guidance because I don't know what to do. Remember what I just read 2 seconds ago from that energy research firm. Tariff, I'll read it again, the main line. Tariff policy is impossible for us to predict and doesn't have a clear goal. We want more stability. That's what every corporate CEO in America right now is thinking. Every single one. They may not say it, but that's what they're thinking. Okay? Are we clear so far?
Yes.
Okay. So now we're going to get to do some fun stuff, which is we'll look at some of the charts. Yay! I know you guys like to look at that. So let's get to that. Okay. So first things first, let's look at S&P. We like to look at S&P, right? It's the first thing we like to look at. S&P. Okay. So I spoke yesterday about the S&P and where I thought it would be potentially going. In essence, we really did nothing today. We basically closed at the high of Friday. We really just went nowhere. Honestly, we just literally just went nowhere. Okay. Tech, we'll take a look at that quickly. Same thing, went nowhere. You see that? We just went nowhere today. See that? We just literally just went nowhere. Look at the Russell. Russell, let's see if we got a little Russell muscle today. Nope. Also, nowhere. Everybody's saying we just literally went nowhere all day. I don't want to use the word literally over again. Okay, let's look at Nicey Fang. Same thing, went nowhere. Okay. Natural gas. We're just going to touch on a couple of things. Natural gas had a big move today to the upside, right? Who knows why this happened? Or who wants to take a guess at why this happened?
Was there a storm somewhere?
Oh, there was a storm. It definitely was somewhere. Yes.
That's the best I got.
There was news right when right at the bell when this opened that hold on.
Was this the India Pakistan
Nope.
thing?
Nope. Nope. I just want to get the right countries because I remember it was I forgot which countries it was. I want to make sure I got it. Hold on. There we go. There were three countries that had a massive power outage today in Europe. Spain, Portugal, and I believe France. Literally, I keep saying the word literally, lost power. Millions of people across the EU are sitting now without power. I don't know if they got it back on or not. But that's what hit. That was the news that hit. That these three countries in the EU all of a sudden went dark. That's what caused the spike. So you're going to ask why? Why? Who cares? Why should that have any effect on natural gas? Right? Good question, right? Yeah, it was Spain, Portugal, and France. Yeah, LNG, liquefied natural gas. That's why this exploded today. Because now there's going to be a race to get natural gas over to Europe. So the thought process was, if this happens, this is very, very bullish for the market because they're probably going to keep tariff or no tariff. They're going to need natural gas now. They're going to need to buy it from the US. That's why we had this spike today. Got it?
Got it.
Okay. So let's go through some of the important names for this week, and we'll see where they're holding and where we can expect them to be. Does that sound like a good idea?
Sure does.
Okay. Let's do UPS first, just because that's reporting first thing in the morning. Okay. UPS, these are all dailies. Okay. UPS, I'll tell you what my expectation is. I'm not so concerned. I think they'll be fine on the numbers because they're going to report. I think the quarter will be okay. I'm more concerned with what they think shipping costs are going to be based off of tariffs. Where do they see things on a global scale? So to me, even though they're not a massive freight shipper, they will be a shipper in terms of you buy something in a European store, they ship it to you. Some people use DHL, some people use FedEx, some people use UPS, whatever. They'll have insight into that. I'm not so concerned about where it's going because honestly, I have no idea where it's going to go, and I'm not even gonna attempt to go there. I will make educated guesses. I believe that if they say good things and they think that this is going to be moving along, I think the stock is up here. I think it's a $10 move, if not higher. The expected move for tomorrow is let me just pull that up so I should know because otherwise I'm gonna give you wrong information. Let's take a look. Well, the expected move for tomorrow morning is UPS is $6.40. That's the expected move.
Where do you get that from, Dan?
So if you go into Toss has a thing. You have Toss? Anybody have Toss? Well, if you go into Toss, you go into the trade tab and you type it, excuse me, and you type in the ticker, there's a yellow like box that pops up that says MMM, that's the market maker expected move, and that's where you find that information. In the trade tab.
Thank you.
You got it. So that's UPS. Okay. UPS is going to be a read through on the economy. So we want to know what UPS says. They're going to be, it's important. They're an important company. Again, they're not lotto tickets. They're companies. They're businesses. They will give insight into what other businesses are doing, by the way, especially businesses that do a lot of shipping. Okay. Let's look at JetBlue, even though I don't think it really matters as much, but we'll take a look. I mean, $4, I'm not even wasting my time. Sorry, I'm not even wasting. Next.
Yeah.
Okay. Coke. Coke, I mean, it's a stable company. I mean, there's a reason why it is not a stable company. There's a reason why it's a staple. It's a staple company. So I'm sure it'll be fine. I'm not even gonna waste time with that. Okay, Visa. Visa is going to be very important. Visa's expected move tomorrow is $12.96. So let's just round it up to $13. That's the expected move in Visa. Visa is going to be important because it's really going to tell us what is the health of the consumer. Really, really important. Okay. I'm not going to sit here and be busy with technicals because, to be honest with you, your technicals and my technicals, it's not going to, and then for those watching, it doesn't make sense. So I'm not even going to waste your time by sitting here trying to go over every technical aspect of it. Um, you know, you can send me an email, send me a what's it called, and we can discuss it off stream. But otherwise, group guys, we're going to get to this, so don't worry about that. Um, So that's Visa. Let's see what else we got. Starbucks. I'll be honest with you. I don't really care too much about Starbucks, and I don't think Starbucks is going to matter. I really don't. I really don't think Starbucks is going to matter. I think it matters because it's Starbucks, just a name, but I don't think it matters. Okay, so I'm going to move on from that. Okay, Caterpillar. Caterpillar is going to matter very much. Caterpillar, the expected move is $15.95. Okay, Caterpillar is going to be crucial for development in terms of China. They do a lot of stuff in China, and really they're going to be the first one to say what they're seeing in terms of this whole tariff thing. They will see it. They're going to see it very, very quickly. Um, so they're an important company. If everything is good, then up. If it's not, then down. I know it sounds silly to say if the market doesn't go up, the market goes down, but just to sit and try and guess where things are going to go, especially when they're not reporting for 2 days from now or 3 days from now, it's a little bit of a fool's errand because anything you're going to look at today is not going to be applicable when these things report in 2 or 3 days from now. You understand? Because a lot of the juice can start moving before that, and where does it go from there? So it's really a exercise in futility to start preparing for these things 2 or 3 days before binary events. So that's why I'm not busy talking about technicals because it doesn't make sense. We can go over Apple technicals today, and who knows? And they don't report until 4:30 on Thursday. What happens between tomorrow and Wednesday and Thursday? Like the stock could be a completely different place. So it's kind of a little bit of a foolish errand. That's why you have to do your homework the night before. Once the market's closed, and then you're kind of ready for it. Okay. Um, let's look at Microsoft. This is going to be, I would say, is an important one. Okay, Microsoft. The stock doesn't look terrible. The stock doesn't look awesome, but the stock doesn't look terrible. Now, is tariffs really going to hurt their business so much? That's my question to you. Do they sell a product that's really going to get hurt by tariffs? Not really,
I mean, you
right?
gotta have it, right? I
What's that?
mean, you gotta have it. It's not something you can do without in most
Yeah, but
cases.
you're downloading it when you're downloading, let's say, Office or Windows. If you're upgrading, whatever it is, you're getting it off of servers that are in that country. So it's not like when you go and buy Office, let's say now, you're not buying it from, let's say, the EU. You're getting it from it's a company based in the US, and you're probably getting a download from a server based in the US, right?
Mm.
So really, listen, can they be affected? Sure, they can be affected, but let's be honest about from a product perspective, not really. Okay. Meta. So who knows what business is Meta actually in? What's their business? Where do they make? How do they make money?
Advertising.
Gotta believe it, advertising. So if they're an advertiser and Google's numbers were pretty good, right? They were okay. I mean, they were pretty good. They weren't stupendous, and they weren't, you know, flushed down the toilet. They were pretty good, right? They were decent, right? So the stock should continue in sympathy, right? So I could say that I probably would assume the stock is somewhere in the 588 to 600 area, just because I expect them to just do well on their numbers. Okay, make sense? MasterCard, same thing like Visa. It's going to be whatever Visa reports, MasterCard will be the sympathy. So you can just that's the read through. Okay. All right, let's get to the big boys. Apple. Apple is in a little bit of a conundrum. Supposedly, I've heard that there's exemptions on these tariffs and this and that. And to be honest with you, it is so hard. I don't envy these executive committees. It is so hard to figure out what's going on with these tariffs. Who's getting, who's not getting, what products are exempt, what products are not exempt, what companies are exempt, what companies are not exempt. On Monday, nobody's exempt. On Tuesday, you are exempt. On Wednesday, you're not anymore. On Thursday, only your left foot is exempt. On Friday, only your right foot is exempt. On Saturday, both your feet are exempt. And then on Sunday, nobody's exempt. So it's almost impossible to keep up with this, which by the way tells you that there's really no plan with these tariffs, really, because if you're getting this constant mind change over and over every other day, that tells you that there's really no plan, no confidence in what they're doing. Now you'll hear people who will say, "Well, it's not true. The administration is adjusting to forces that are going on." But when the announcement was made a couple of weeks ago, it was, "We don't care. There's going to be pain. We don't care. We're making America great again. We don't care. This is what's going to happen. We don't care if people need to take medicine." 15 minutes later, oh my gosh, okay, fine. Everybody's going to be rich and we're going to this and that and that. And then 20 minutes later, okay, I'm taking off tariffs on this and that. It's almost impossible to keep up with what's going on over here. And if you're a trader trying to hold on to stuff, it's a very dangerous environment. Why? Because every 5 minutes, then everything changes. 1 minute tariffs are on, the next minute tariffs are off. The next minute tariffs are back on, the next minute they're off. So what do you do with this? And imagine if you're an executive or a CEO at a company and you're trying to figure out how you're going to run your business in the next 6 to 12 to 18 months with all this tariff stuff. It's almost impossible. Would you say that that's a fair statement?
Yeah.
Okay, crickets tonight. Got it. So because of that reason, that's when these calls become a lot more important. And if you can't listen to the call, read the transcript. Just read through the transcript. It'll take you a couple of minutes just to hear what they're saying and specifically focus on the Q&A. Not so, listen, the opening statements, the Q&A from the analysts, that's what's going to be important. The Q&A usually lasts about 30 minutes. Just to hear it, because they're going to ask very simple questions. Tariff questions. How much can you pass along the tariff, if any tariff, to your customer? How much of it are you going to need to eat? How long do you think this is going to last? How are you adjusting your business? Normal questions that any analyst would ask, right? Questions you would ask, correct? Good. Okay.
Hey Dan, is that also in the investor tab area on the websites?
Yes, sir.
Yeah. Okay.
Investor relations. It should be your best friend during earnings season.
Sweet.
Yeah, do you think some of the tariff discussions through these investment calls kind of set the stage as a potential out for writing down some bad practices or something? I mean, I guess what I'm trying to say is I've listened to a few of these and it always seems like they're pumping it, like, everything, the sky is blue and everything is going well. And I feel like sometimes when you have a downturn in the economy, it's just an opportunity for these guys to kind of write off a lot of stuff that they've been hanging on to. Do you find that to be something that you've experienced or seen?
So it depends on the company and it depends what they're writing down. Sometimes you'll get if they need sometimes they need the write down for tax purposes. So what'll end up happening is they'll take like these one-time charges to offset certain gains,
Mm,
which is okay. Um, Sometimes you'll have a situation where a corporate balance sheet has too much debt and they need to write off some of that debt or they need to write down some of that debt and they'll do it as a one-off charge. They'll do that. Again, tax purposes. For the most part, um, I wouldn't say that every CEO is rosy and bullish. But what they do share in common for the most part is that if the top two or three businesses in that sector, so let's say in retail, it's Amazon and Walmart, right? So if Amazon and Walmart are doing well, usually there's a and the CEOs are speaking in very um, bullish terms. Usually the read through is the most of that sector should be doing well. So when you see, let's say, so there's certain businesses you can't really read through. So I'll use Tesla as an example. Tesla is very hard to read through because it's by itself EVs, whereas every other, with the exception of Lucent and Rivian, every other auto company has an EV division. Like BMW has an EV division, Mercedes has an EV division, Volkswagen has an EV division. They're not pure EV plays, or even in the US, GM and Ford, they don't have that pure play. So it's very hard to do it. Netflix, on the other hand, which is besides being a content provider, a content creator, and a content provider, they also run pipes, so they get to see broadband access. Who does Netflix use to run their pipes? Who runs Netflix's pipes? Who knows? Anyone know?
um,
Amazon,
Amazon
Comcast?
what?
Amazon
Oh,
Web Services.
AWS. Right, exactly.
oh, interesting.
Yeah. So because of that reason, you'll hear from when Amazon's call, besides being on the retail side, what's going to be important is the AWS side. That's going to be really, really important, like really important. So you want to see how these businesses are all doing. Now, Netflix knocked it out of the park. I said yesterday that I think that Netflix is going to buy somebody. I also think Netflix may sign some kind of contract with some live sports. Just as a side point from earnings, just as a side thing. You know how YouTube signed the NFL? I just think that Netflix is going to sign somebody. They're going to make some kind of draw and some kind of foray into live sports. And I think that's coming too. So I think they're going to buy someone, and I think they're going to go into live sports also. But that's a different type of business because that's really shielded from tariffs, right? Apple is not shielded from tariffs. There's an interesting video that's been put out by Beijing, and they were talking about all the products. I think I've mentioned this once before, but it's worth repeating. They were talking about all the products that they make. And one of the things that they brought out was, I believe, a Birkin bag. And the bag, I believe, cost $38,000 or something like that. And it's top quality metal and top quality leathers and everything is top quality. And they were saying how we make it. It costs with labor about $1,400, $1,450, something like that. And yet they're charging $38,000, but it's coming from us. We're the ones putting it together. And what they were trying to show was not so much the markup, which is astronomical, but they were trying to show is that's how much the world is reliant on China for their manufacturing. So when you take a company like Apple, which I think an iPhone, and I could be wrong, I don't know the exact price. I think an iPhone Pro Max, I think, costs something like between like $600 and $700, something like that, maybe a little bit more, but around that area. If it's costing them, let's say $700 all in delivered to make, and they're charging $1,500 for the phone, tariffs eat into that. Tariffs eat into that. So it's not so much that um, Apple pays it on the way out from China. Apple pays it on the way in. So the tariff, you know, don't misunderstand. Tariff is a tax on the importer. The only thing that offsets it potentially is if we get a federal tax holiday. I don't know how that's going to happen because we have to pay for it. So I don't know. but I don't want to jump too off topic. McDonald's is important. Now, you may not think that McDonald's is important, but McDonald's is important for one reason and one reason only. They have their hand on the pulse of what's going on globally with the consumer, because pretty much everybody goes to McDonald's, and because of their value meals and their menu offerings, they get more of a lower to middle class style customer coming to them, so they could see who's hurting and who's not hurting through their sales. Some of the like Chipotle, for example, not did very, very well in their earnings. But who's Chipotle's target customer? Chipotle's target customer is more upper middle class. Chipotle is the world's most expensive burrito, right? No, regular, lower and lower to mid and lower class people are not spending, 15, 16, $20 on a burrito. So it's read-throughs to tell you where the country is or where the global economy is in terms of recession. That's why these calls are very, very important, because you're going to get an idea of where things are going. It's not just, the stock comes down, okay, I'm going to buy it, everything is wonderful. It's all dependent on what they say. Now, remember, tariffs have no bearing on their businesses in Q1, nothing. Everything is going to be now in Q2. Okay? So let's look at a few more. Let's say, Exxon. Okay. Exxon. Stock looks all right. I mean, it's pretty much, chop slop city over here, right? That's really where it is. But the question is going to become, oil's been going down. How does that affect their cash flows? Now, Exxon has a few projects in the pipeline that they're working on. I think their break even on oil is something like $25 in these projects. So they can weather this oil like nobody. This is nobody. They're still making money hand over fist. Okay. Chevron the same way. Okay. Chevron, same concept. They also have some projects that are going on that I think their break even is like also around $25 on some of these projects. These are massive, large integrated companies, so they can weather the storms. The smaller guys are the ones that really can't weather it that much. But again, it's going to be important to listen to the calls, or at least read the transcripts, to get an idea of where these companies are going. Now, I know you're going to say, why don't we do anything technical? Again, it's Monday night. Exxon, Chevron don't report until Friday. This picture could look very, very different come Friday morning, come Thursday night at the bell. So who knows? Okay. But what you want to do when you're preparing for earnings. So what company do you want to look at, so we could do like a semi preparation exercise? What company?
Yeah, can I ask a question about this real quick?
Sure.
Now, are there like sympathy plays that you can do with our group, paying attention to crude and oil and things like that, where I keep hearing you saying there's a potential for oil to be in like 4 or 5s, even potentially. So if that does happen, I don't understand the relationship of how that would affect these companies, or even if it would. And then if it did, is there a way that we could like sympathy trade it or capitalize on the price of oil with that? I assume there is, but I don't understand it.
Yeah.
If there is.
Are you talking about it from a company perspective, or are you talking about from an oil ETF perspective, like a USO?
A company perspective.
Okay. So the first thing you would do, and that's a great question. So the first place you would look, if you go to the OIH, okay? The OIH, this is an oil service. Are you familiar with the OIH?
Yes.
Okay. I would look at companies within the OIH, right?
Okay.
I'll be honest with you, I wouldn't look to Exxon, Chevron, because the integrateds have, the integrateds have such diversified businesses that they're oil and gas. They have gas stations. They have so many things going on that it's not really going to give you that juice or that bang for your buck that you're looking for, as opposed to, let's say, I make up, let's say, a Halliburton. I'm just making this up. Like where it's not an integrated. They're in the OAH. They're obviously in that XLE also, but they're more of a drilling type of play. Like you see, like when things went down, they kind of fell out of bed a little bit.
Yes.
Okay. This, whereas let's say, for example, you look at Exxon, just keep this visual in your mind for a second, okay?
Yep.
We go to Exxon, it's a little bit of a different picture. Go to Chevron, it's a little bit, yeah, granted, they all got hit, don't get me wrong, but it's a little bit of a different picture. Whereas let's say go to Transocean, you know, different picture. Go to, Halliburton, it doesn't look the same as Exxon. See that?
Yeah.
Or even Valero, okay, also kind of the same type of situation. Now they're not rip roaring back up to the upside because oil is not rip roaring back up to the upside. Okay. What I will tell you, let me just see if I can see it. There used to be a time where when oil would go down, this trade doesn't work anymore, but it's something that you can always look at to see if sometimes it does work. Sometimes it doesn't. When oil goes down, sometimes Exxon would go up and Chevron would go down. And when oil would go up, Chevron would go up and Exxon would go down.
Oh, interesting.
It's like a weird play. Is it a money that you can bank on it all the time? Absolutely not. But I would look into the OIH. I would look at the XOP. I would look at the top 10 names. I would, and obviously the XLE as well. But remember, the XLE, the top two names of the XLE and what drives most of that ETF
Yeah.
is Exxon Chevron. So if you're looking more for pure play of oil, I would, as sympathies, I'd be looking at either the XOP or the OIH and just pull out names from there.
Got it.
You know, um, it's just let's play like this. As weird as this is going to sound, there are so many ETFs out there that are very strategy specific or very sector specific or very specific in a subsector of a sector that you can find names that you want to use in order to put on a position that will express your feeling on the commodity. So I'll give you an example. For about 2 weeks, I'm not sure if the trade's still going on now. It probably is. Um, Most European or outside the US investors were putting on positions to express a bearish dollar trade, where they were trying to sell the dollar and be bearish selling and be bearish the dollar. Which, if you notice, the dollar was falling apart. The dollar fell down to 3-year lows. They were pushing this down. They were expressing their bearish view of on the US dollar. So they're all, and they can do it however they want. There's certain strategies they can use, never. But there are ETFs you could find to do this. Would I do the entire ETF? No, because you got to be careful with what you're in. I would go company specific and then kind of go there. I wouldn't necessarily do the I wouldn't necessarily go in and do right away the ETFs because you could get hurt. If you're in the wrong ETF, just liquidity could become a problem.
Gotcha. Yeah, I don't mess with ETFs in general.
I mean, the bigger ones you can. State Streets are fine. The XLE, XLK, SPY, Invesco, the Qs, those are fine.
Sure.
That's not a problem. Obviously, and then the power shares are fine. There's certain ones, BlackRock ones, certain ones that are fine. But when Wisdom Tree, when you start getting into more of these like wacky, esoteric, who knows what, that's when you start running into problems. But if you stick with the majors, you'll be fine. Even if you get into, let's say, direction funds, and you kind of, but the direction funds, which are double and triple, they're not really made for holds. They're really made for intraday to catch juice intraday. They're not really meant for holding. So you just got to know what you own. You have to know what you're buying at all times.
Thank you.
Okay, so let's pick. You know what? Let's pick a company. Let's pick it just to see how we would do this. Let's do Apple. Want to do Apple? What do you want to do?
Sounds good to me.
Yep, let's do Apple.
Is that the consensus? An apple a day keeps the doctor away?
Yeah.
Okay. So right away, just at first glance, okay, let's just leave the earnings out of the way for a minute. Okay. You could see that the stock obviously found a bottom and is now coming back. So the stock hasn't gotten back into the Liberation Day gap. I don't know how much longer we're going to call this thing Liberation Day, but the screwy this we're going to call it the screwy day gap, the poster board screwy day gap. Okay, it hasn't really gotten into it yet. I mean, it broke above. I'm not saying it didn't, but I would not consider this really getting into it because the first time it got in, it got rejected, and it hasn't even gotten back to that rejection spot yet. Okay, so when I'm looking at this, I would say to myself, okay, if Apple's going to be any good on the upside, the first thing it's got to do is it's got to close this gap. So you could make a play where if it takes out this high, you would get long looking for that gap fill at a minimum. Now it's not about how many dollars it goes. That's not what you're looking. You're not looking at it from that perspective. You're looking at it logically. If it takes this high out, where's the next spot it's going? Well, you get the gap fill, and potentially we start making a run towards 225. We get above this, then obviously it keeps going. But first glance, above this high first, gap fill. That's the first thing you're looking at. Okay. The second thing you're looking at is on the downside is you would be looking for a retest of this hammer over here. Everything else in between is kind of noisy. I mean, there's trades there, don't get me wrong. I'm not saying that there isn't, but it's kind of noisy. Let's make this a little bigger a second. Okay. It's definitely a little bit more noisy, right? You could do, you do. I mean, I'm terrible at drawing tools, so don't kill me. I mean, you could say that you kind of have like a little bit of a channel over here. I mean, it's really, really tight. I don't. I mean, this is. I mean, to be honest with you, this is really kind of grasping at straws. You could say you have like a little bit of a channel over here, and then you're looking for a channel break. Again, you're really grasping at straws with this. Like this is not. I'm looking for a trade. I mean, this isn't the market's telling me to get in. This is I'm looking for a trade. There's other. Then you could do. Let me just hold on a second. Then you have, let's say, you even do horizontal. You could go this way and say, okay, we kind of, you can even, I would say, even use this as like your little bit of your like area over here. You kind of have like your horizontal kind of sideways action. Maybe, it builds out and then you look for a break somewhere over here, possibly. Um, that's one way you could look at it. You could also look at it from the vantage point of, this to this, what happens here. There's a build and then a break this way and that way. There's again, the problem, I say this all the time, and I know it's going to sound really, really mean, and it's not. The problem with doing all of this drawing and all this technical stuff is that it's very, very subjective. So because of that reason, it just becomes really, really difficult to figure out which way you want to go. Some people are really good at it, some people aren't. It just all depends. You know, I always have the thing, if everybody can see it and everybody can do it, it probably can't work. Right now, you don't even have a head and shoulders, you got nothing. So this isn't even like a great chart. So let's look at something that's maybe something that's a little better. Let's look at Netflix for a second. To give an example, okay? Netflix is pretty much golden at this point. Pretty much at this point, it's a rock star. But, and this is going to answer your question, Cobb. I'm going to find it right now for you. Hold on, let me see if I can find one. Give me a second. Some of these charts are just so sloppy. It's very, very difficult. By the way, look at this. By the way, this is Chenier. Look at this. It's already taken back that gap, the poster board choppy, and it's way past that already. Look at that. That's pretty amazing. Isn't that awesome?
Does look pretty good.
Yeah. Want to see if I can find one that has that.
Now, with that,
Yeah,
does
go
it
ahead.
have to be at like a peak or a top?
For that trade,
Yes.
it does.
Oh,
Because
okay.
you're looking for a counter trend move. That's what you're looking for.
Okay, so it's like okay, it'd be like an extension trade from I don't know, So it's like super extended from a 10 EMA or something like that.
Not even so much that. No, not even so much. Hold
Okay,
on.
okay.
Give me a second. Give me a second. I'm gonna find one. Give me a second. Seek and ye shall find. I'm gonna find one. Oh, here we go. Perfect. There we go. Right here. I got a drawing thing. I got a good drawing tool here. Okay. Right here. Right here. Right there. You had a move. Okay, you've had a big up move. Okay, you get a move. You're looking for some kind of extension to see if you can possibly get, like, let's say you're saying to yourself, let's see if it got above here. Let's see how long it can stick. It kind of reversed. Let's see, maybe it can make a move down. Now, this obviously was crazy, but
Yeah.
you get a move. You come back in to where the previous day's highs were, specifically here.
Yep.
Your stop goes on top up here, and you let it run. Now, do you expect it to go this way? No, you're trying to just capture it. After a 1, 2, 3, 4, 5 day move, you're looking to try and see if you can capture a almost like a reversion to the mean type of trade. That's really what you're looking to do
Gotcha.
in a nutshell.
That's the 80-20 trade?
Yeah, yeah,
Okay.
yeah.
I joined late.
Like even what really what you're looking for them to really be very, very powerful is you really want to see. Let me see if I can find one. Hold on. I'll show you what trying to see if I can find one that's really, really good. Sometimes they're very hard to find. I'm not going to lie to you. Sometimes you're looking for, no, this isn't a good one. You're really looking for some kind of like hammer type of action. That's really what you're looking for. Like some kind of like toppy or bottomy type of action that happens.
There's
This
one
is,
there, no?
what's that?
I can't tell. Go left. Like to this little fake out, this second peak, like it was curling up, looked like it wanted to go. Nope. Yeah, that one.
So here's the problem.
Even though it's not that extended. Never
Yeah, it's
mind.
not that extended. Whereas this one's not even good either. Hold on. We're going to find it. Hold on. We're going to find it. We're going to look for it. We're going to find it. So this isn't exactly, but this is kind of what I'm talking about. You see how you have this inverted hammer over here?
Yeah.
That's kind of what you're looking for. That's what you're looking for on these moves. Where let's say like this is a perfect example. This is perfect. Here. You get this move, 1, 2, 1, 2, 3, 4, 5, 6, whatever. Then you open up over here, and then all of a sudden, or whatever, you get this thing where we take out the prior day's highs, come back in, you get short, stop goes here, and you get like this nice couple of day counter trend move.
You don't think it matters where it necessarily opens up at? I would imagine if it gapped over and like up and on an extended move, moved up a little bit, failed to move, and then like came back into the previous day range, that would be a pretty solid.
Yeah,
Like,
it's not so. I don't really focus. I wouldn't really focus too much on where it's opening. What you're looking for is you want to see that it reclaims that prior day's high or low after a multi-day move. That's really what you're looking for.
keep it that simple. Okay.
Yeah, and then but 1 or 2 days, no. But you want it to be like a few days.
Yeah, yeah, for sure.
So like so even though this is also kind of sloppy, sometimes the problem is they're hard. They're not so easy to find because I don't look at charts too often, so it's not so easy for me to find. Um, I wish I did, but I don't. I'm trying to think if I can find. But you get the idea. I think you get the idea.
Yeah, I get the idea. Yeah.
Hey, Dan, I was just thinking, what are your thoughts? And I don't even know if this is true, but I had heard, and I don't even know where I heard it from, that a lot of our prescription medications and stuff like that come from China. Um, I'm wondering how CVS will be impacted by that and if they'll even talk about it, because I would think they're like a consumer store and they may also be impacted by tariffs.
It's a great question.
I'm just thinking it might be one to listen to.
I'll be honest with you, it's an amazing question, and I think it's actually very, very smart. To be honest with you, I'm not so familiar with that sector, so I can't answer it intelligently. So I'm gonna defer to what they say, and then we can have a discussion afterwards. I don't know. But it's you bring up a very good point. Unfortunately, I just don't know.
Yeah. Okay.
But it's something to listen to on the call, what they're saying. That becomes actually something that's important. So yeah, I agree with you. It's actually an important thing from that angle.
I'll have to find out when they're reporting and listening.
I'll tell you right now, Thursday morning at 7, Thursday morning in 2 days. Tuesday, Wednesday, 3 days, sorry.
Okay.
But
Check it out.
here's the thing. As an investor, you're starting to think about a business owner. And because of that reason, now you can start making decisions on when the stock reports, what are you willing to pay for the company? And that's the way really the real money traders really approach things. They're not necessarily looking at this stuff. I mean, don't get me wrong, they're looking at this. I'm not saying that they're not, but they're also focusing their attention on what are these companies actually saying? Because again, they're businesses. They're not just, as Peter Lynch likes to say, they're not lotto tickets. They're companies. They're businesses.
Right.
Any other questions that we can cover here? Because this was really supposed to be like just kind of like an idea of just a nowhere to go to listen to the companies, hear what they're saying. Then you can do a read through of where things should go. And if you're an astute trader, then not only is it that, but then you can figure out where the indices are going to go. Because remember, Microsoft and Apple, the top two names in the S&P and the Qs, they're both reporting Wednesday and Thursday. Amazon is in the top five. Meta is not in the top five. Or maybe it is. Maybe it's number 6. So after today, as of Thursday night, the top 5 well, with the exception of the exception of a couple, except for semis, most of the important names are all out of the way. Now we'll be able to see based off of what Qualcomm says on Wednesday, will give some kind of read through as to what Broadcom and Nvidia may say. Now, granted, a little bit of a different business, but we'll have to see. One thing to consider also, and I would behoove you to listen to this on the Exxon and Chevron calls, is what do they think about AI, and what do they think how's that going to affect their business in terms of power draw? Because you need a lot of power to run AI models. Where do they see that? What do they see that hitting their bottom line? Positively, obviously it's going to be positively, but it's going to be big, small. What are they expecting? Anything else we can discuss? Otherwise, we're gonna wrap it up. Told you this was gonna be more of right, very, very much to the point and quick.
Yeah, this was great, Dan. Thank you.
You're very welcome.
Thank you, Dan.
Yeah, thank you very much.
Okay, fine. I'm gonna put this up on the YouTube, and as soon as it's done, I'm gonna put it up so that everybody will know that it's there. Any questions? You know how to reach me. And otherwise, I will see you all tomorrow.
Great, thanks.
Later.
That's good.
Thanks.
Thanks, Dan.